I know there are so many different interests, and it would have to be done very carefully. But I would challenge you that that is the future if we want to have a modern financial services sector. Now, here's the best thing. We're in Ontario, financial services capital of Canada. Canada, the only country, modern economy, that did not have to buy a major bank and bail them out, or a major life insurance company, right? I mean, that is something we can all be proud of. And don't say to the regulators that's because we had this kind of wild, wild west system that they had down in the States. We do have regulation, and it is important, right? But the idea that that is the solution for everything is not on, right? We regulate the healthcare system, but the doctors regulate themselves. And that's the difference. We do have to have regulation. There is a role for government to play. And when that is dysfunctional, you end up with what happened in the States. And that idiocy infected the entire world economy and rolled around the world in 6 months, bringing down companies that one would have assumed were rock solid. Right? So there is a place for regulation. But I just do not think that that place for government regulation is in the relationship between you and your client. They trust you. Because they trust you, you're making a valuable contribution to our economy. But we have to make sure that the people that should not be trusted are not practicing in the province of Ontario. Now, I understand that you have some questions of the guy from here who's jumped on to the other side of the fence. So I'd be more than happy to answer questions. I think maybe, Terry, oh, you have to go to a microphone. There's one here. Yeah, and I think there might be, yeah, there's just the one microphone. Oh, there you are there. Okay, so we'll go here first. And just for everybody else, just to make it a little bit easier, if you just say who you are and where you're from, that'd be great.
My name is Kim Seipt. I'm actually with Freedom 55, and but I'm also on the board of directors of a Chamber of Commerce that also dealt with HST at the Ontario Chamber of Commerce level. Great. So understanding the background of why we put HST in place and understanding that it puts us on a level playing field and all the benefits to business, as an advisor, I have a bit of a concern from the perspective of HST on MERs, from the taking a look at it from the side of the coin. Have you looked at the long-term effects of how the internal erosion on portfolios will affect the ability for our consumers to be able to fund their own retirement, and the long-term effects on the social system and how it will affect it that way?
That's a great question. Okay, and I'm going to try to give you a short answer. If we're going to look at one effect, we have to look at all effects. There is one effect, right? It has to be the fact that when we brought in the GST, the federal government brought it in, they exempted financial services, right? So the financial services are the end consumer. And under any kind of value-added tax, it's the last person that pays the whole freight, because everything else works its way through. Usually that's the consumer. But in Canada, it's the company that is the consumer, not the client. So when you get a mortgage, there's no GST on the mortgage. When you get a GIC, there's no GST on the GIC. That cost that's embedded is borne by the financial services. It's also the same for people who do private medical equipment, diagnostic tests. There's a number of things. People who are landlords, there's no GST or HST on rent or on condo fees. So it's the person that's exempt that is the final consumer. It's kind of odd though, right? Because my understanding, I went through some history, that when they brought in the GST, the financial services said, oh my God, we got to be exempt. Whatever, we got to be exempt. After they figured out that they were exempt about 5 months later, they said, oh my God, we shouldn't have been exempt, right? So the question here is, mutual funds, a good example, is the most, I would say, most service-intensive financial product out there. From where it was in 1990, a very small industry, to where it is today, a cornerstone of the financial planning and the wealth creation of so many Canadians, there's been a large change in that. We as a government that has always said no to being part of one harmonized sales tax, right, have, I think, on occasion told the federal government, you know, you need to reform that. I think they have said quite rightly, hey, this isn't your tax, You don't even want to be part of it. Don't tell us how to do what we do. Right? Well, after July the 1st, Ontario, which is the financial services capital of this country, is in the game when it comes to the nature of how we tax services. But we have to be in the game to have any influence over that whatsoever. I would say to my financial planning friends, right, remember that we're also reforming the tax system. That as you do projections for your clients into the future, one must take into the account that we are lowering personal income tax for people effective January the 1st, particularly for seniors where we're enhancing tax credits. It is true that people of very modest means who most likely are not our clients, they overall will benefit from our tax reform because of the generous nature of the tax credits that we're bringing in. But I think for most middle-class Canadians, which is our, the majority of people that we deal with, it is important to understand that we are reducing the marginal effective tax rate on income. We're trying to do what other modern economies have done. We are willing to tax the consumption of wealth more, so we tax the creation of wealth less. But when it comes to mutual funds, in particular MERs, the other thing to remember, and it's great that our CEO Paul is here, always remember something. For every group that has to raise the GST from 5 to the HST of 13, everyone who has to do that, and that includes your barber or your hairdresser, right? Their cost of business is going down. Collectively, $5 billion a year in the province of Ontario. So there is a lowering of the cost of business because we're allowing people to keep what has been their inputs on PST. And we're reducing administration, and we're lowering corporate taxes for your practice. For small business, we're lowering that. We're lowering corporate taxes for Paul over here at GWL from 14 to 12 and then down to 10. For most of us in this room who are incorporated, like I used to be, we're lowering the small business rate from 5.5 to 4.5, effective July the 1st, but we're also getting rid of the small business surtax. That's that extra 4.75 you have to pay when you really start cooking with gas and your practice is really generating new wealth, right? We're eliminating that. We'll be the first province in Canada to eliminate the small business surtax, which we think will free up the small business sector particularly. So there are one tax change on the consumption tax, but there are 9 changes on the income tax side. And I think it's important for advisors, and I can recommend you going to our website, just Google ontario.ca/tax change. I think we have a very robust website at the Ministry of Revenue that explains all of that. I think it's important. 2010 is going to be a tremendous year of transition. And so I hope I answered that, but it does allow us as an Ontario government to get in the game about how we tax services. Yep.
Good afternoon, Minister. My name is Jack Snedden. I'm from the provincial